Breaking economy news, housing starts, PPI inflation, the Fed's own industrial production index. If you were thinking recession, forget about it. Housing is big. Fed Chair Yellen thinks housing should be stronger, and the fact that it is not is making her think interest rates should be raised just at a gradual pace over the next few years, cautious, step by step. Of course, now she has some new worries which could make the gradual pace a very gradual pace. Market not reacting much to the three economic reports out today. Instead, yields are moving a little higher with crude oil back above $30. Stocks continue to recover from last week's overdone sell-off. So housing starts and permits are both slightly lower than they were in December. Permits 1.202 million annual rate. Starts 1.099 million annual rate. What's the longer run trend? Well, housing starts seem to be holding at the 1.1 million level, having moved up a notch in 2015 to 1.1 million from, call it, 1.0 million in 2014. We are a long way from the 2 million annual rate during the housing bubble years last seen in early 2006. This doesn't mean the economy isn't okay, it just means Fed Chair Yellen wants to be gradual. Inflation, PPI today, CPI this Friday, and the Fed's preferred PCE inflation not till Friday, February 26. PPI, final demand inflation, beat expectations, up 0.1% instead of the forecasted 0.2% decline figure. But inflation is still falling 0.2% over the last year. We still prefer the old PPI, using it strictly for commodities at the producer level and taking a look to see what pipeline pressures might be building, what might be in store for CPI. Not a lot of inflation risk out there, with final demand goods prices, ex food and energy, unchanged in January after a small 0.1% rise in December. What else? Industrial production is still rising, so you know the economic expansion has not gone off the rails yet. Manufacturing production is up 0.5% in January and is still in the plus column, running 1.2% year on year. Factories are not running as fast as they used to ever since the dollar went into the stratosphere, mirroring the free fall in commodity prices in late 2014 hurts exports. Inventories are elevated as well relative to sales, and this is another reason production rates have been dialed back somewhat. Manufacturing accounts for 75% of all production, and you basically cannot have a recession without production in decline. Net-net, the economy isn't setting any land speed records, but it isn't in headlong retreat either. Residential housing construction and manufacturing production continue to move the economy forward at a 2% GDP pace. For the economy, it's onward and upward. Factories did not take a step back after the financial market turmoil in January, showing the financial market's volatility is not affecting the real economy yet. The real economy remains better than the markets think.